Hi everyone, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, let us solve example number 3 of income from business. So this example was asked in April 2019 of university examination. So the question is, the following is the profit and loss account of Shri Ram Rao for the year ended 31st March 2019. So this is the profit and loss account of Shri Ram Rao. Ram Rao is the owner of the business. He has furnished the following information in profit and loss account. So in debit side, it is opening stock 2,30,000, two purchases 2,80,000, wages 2,40,000, rent 2,92,000, two repairs to motor car 26,000, two medical expenses 50,000, general expenses 2,20,000, two motor car 2,60,000, two provision for depreciation on motor car 28,000, to advance income tax paid 22,000, to net profit 1,72,000. So this was the particulars in the debit side. Now in credit side, buy sales 17,20,000, by closing stock 40,000, by gift from father 54,000, by income tax refund 6,000, and both the side total is 18,20,000. Okay, now next is what the following further additional information is given. So what are the information? Like adjustment, Ram Rao carries on his business from rented premises. Okay, so Ram Rao, he carries his business from rental premises, half of which is used for his residence. So Ram Rao business, okay, he is carrying his business on rental premises. From this premises, half of the premises is used for business and half of the premises is used for his own residence. So on rent there is adjustment. Okay, next is what the use of the car was 3/4 for the business and 1/4 for Ram Rao's personal purpose. So the car was used, okay, 3/4 is used for the business and 1/4 is used for personal use. So on repairs to motor car there is adjustment. Next is medical expenses were incurred for the treatment of Mr. Ram Rao. So medical expenses, adjustment. So it is saying that medical expenses is used for whatever medical expenses were incurred, it was used for the treatment of Ram Rao. Next is wages include rupees 25,000 on account of Ram Rao driver. Okay, so wages, total wages are 2,40,000. So this 2,40,000 includes 25,000. Okay, but this 25,000 is given to whom? It is given to Ram Rao's driver. Okay, Ram Rao's personal driver. Next is, as per income tax rule, rate of depreciation on motor car is 15%. Okay, so there is a depreciation on motor car, the rate is 15%. Next, find out the income from business for Mr. Ram Rao, tax liable year 2019-2020. So that means we have to compute the taxable income for Mr. Taxable income from business for Mr. Ram Rao. Okay, so these were the information provided by Mr. Ram Rao. Okay, now after observing this information, we have to compute the taxable income from business of Mr. Ram Rao. Now, so how to solve this? Okay, first of all you have to prepare the format. Give the heading computation of taxable income from business of Shri Ram Rao for the assessment year 2021-2022. Okay, sorry, 2000 19 2000. Okay. Now, as per the format, so I hope you have remembered the format of computation of income from salary. First thing is what? Net profit as per profit and loss account. So write down net profit as per profit and loss account. So what is the net profit which is given in the profit and loss account? Net profit. Okay, so to net profit is how much? 1,72,000. So write 1,72,000. Clear? Now after this we have to add disallowed expenses. So what are disallowed expenses? Expenses which are not related to the business are called as disallowed expenses. Now from where we will get this disallowed expenses? We have to identify the disallowed expenses from the profit and loss account debit side. Okay, from this debit side of profit and loss account we will get the disallowed expenses. Clear? So first is what? Opening stock, that is 2,30,000. Now opening stock 2,30,000 is related to business expenses. Okay. Next, purchases 2,80,000. Purchases also related to business. This opening stock and purchases are not disallowed expenses. They are related to the business. Next is wages 2,40,000. Now wages is also related to business, but here is adjustment on, there is adjustment on wages. Okay, so what is the adjustment on wages? Adjustment number 4. So it is wages includes rupees 25,000 on account of Mr. Ram Rao's driver. So wages is 2,40,000. This wages includes 25,000 also. This 25,000 is related to Ram Rao's personal driver. Okay. So now for this adjustment we have to take the information of adjustment number 2 also. That is what? Driver. Now driver is related to what? Car, motor car. Okay. So driver drives the car. So now the car is used for 3/4 for the business. The use of the car, the driver has used the car 3/4 for the business and 1/4 for personal use. So from this wages also, okay, from 25,000, the wages which is included to the 25,000 which is given to the driver. So 3/4 is driver has used for the business and 1/4 for the personal use. So wages is also going to be distributed in the same manner. So from this 25,000, 3/4 is related to the business and 1/4 is related to the personal use. Now for whatever 1/4 is used for the personal purpose, then it is called as disallowed expenses. Okay, so first disallowed expenses is wages. That is what? Mr. Ram Rao driver wages. Okay, that is how much? 1/4 personal use. That means what? From 25,000, 1/4 is related to business. Sorry, it is related to personal and 3/4 is used for business. 1/4 of 25,000. 1/4 of 25,000 is how much? 6,250. Okay, so 25,000 multiplied by 1 divided by 4, we get 6,250. So from this 25,000, 3/4 was used for business and 1/4 is used for personal use. Hence it is disallowed expenses. Now after wages, rent. Okay, rent is how much? 2,92,000. Now on rent, what is the adjustment? Rent adjustment number 1. Ram Rao carries on his business from rental premises. So Ram Rao was carrying his business on rented premises. From this on this rented premises, half was used for his own residence and half is used for business. So total rent is how much? 2,92,000. From this 2,92,000, half is used for business and half is used for residence. That means 50% of rent is used for business. It is given for business and half is given for rental basis. Okay, rental means for his own expenses. So whatever is for his own residence, it is personal, it is not related to the business, so hence it is called as disallowed expenses. Next is rent 50%. Half means what? 50% for residence. Ram Rao was using for his own residence. That means 50% on 2,92,000. 50% on 2,92,000 is 1,46,000. Okay, so 1,46,000 is used for own residence, hence it is called as disallowed expenses. After rent, next is 2 repairs to motor car, 26,000. Now this repair to motor car, now motor car was used for 3/4 for the business and 1/4 for personal use. So from this 26,000, total 26,000, from 26,000, 3/4 was used for the business and 1/4 is used for personal thing. So 1/4 is used for personal purpose, hence it is called as disallowed expenses. Next will be repairs of motor car, 1/4 is personal use. That means 1/4 of 26,000. 1/4 of 26,000 is 26,000 multiply by 1 divided by 4. That is 6,500. 6,500. Okay. After repairs to motor car, next is medical expenses. Medical expenses is how much? Medical expenses 50,000. Now what is the adjustment of medical expenses? Adjustment number 3. Medical expenses were incurred for the treatment of Mr. Ram Rao. Ram Rao's personal treatment. Okay, so this personal treatment, medical expenses, is used for Ram Rao's personal use. Okay, for personal treatment, it is not related to the business, hence it is called as disallowed expenses. So you can check the format, whatever personal expenses. Under personal expenses, it can be medical expenses also. If it is used for personal thing, then it will called as disallowed expenses. Medical expenses, that is personal expenses. Okay, the total of medical expenses is 50,000. See, read the adjustment number 3 properly. Medical expenses were incurred for the treatment of Mr. Ram Rao. So Ram Rao is the owner of the business. He has used the medical expenses for his treatment. Okay, expenses occurred for his own treatment. That's why it is disallowed expenses. So 50,000. After medical expenses, next is general expenses 2,20,000. General expenses is related to the business. Okay. Next is 2 motor car 2,60,000. Now motor car is what? Capital expenditure. Now capital expenditure capital expenses is called as disallowed expenses. So entire amount of motor car is what? Capital expenditure. So it is disallowed expenses. Capital expenditure 2,60,000. After motor car, next is 2 provision for depreciation on motor car. 2 provision for depreciation on motor car 28,000. Now check the format. This provisions, okay, whatever provision and reserves, these are called disallowed expenses. So this entire amount of provision for depreciation on motor car is nothing but disallowed expenses, that is 28,000. Provision for depreciation on motor car 28,000 is disallowed expenses. After provision for depreciation on motor car, next is 2 advance income tax paid 22,000. Even advance income tax paid is what? Disallowed expenses. Next is what? Advance income tax paid, okay, 22,000. Now any type of advance income tax paid, wealth tax, income tax is called what? Disallowed expenses. So check the format. See here, income tax, wealth tax, gift tax, then advance tax is called as disallowed expenses. So advance income tax paid, that is what? 22,000. Okay. Now next is what? To profit, net profit we have already taken into the consideration. Now all the disallowed expenses we have identified from the profit and loss account. So next is what? We have to total all this. We have to add all disallowed expenses. So add all this disallowed expenses, you will get the total will be 5,18,750. Okay. Next, add this 5,18,750 in net profit. So 1,72,000 plus 5,18,750. Answer is 6,90,750. Okay. So this is the total. Now from this total, we have to less what? We have to less or deduct expenses or losses allowed but not debited to P&L account. So expenses or losses allowed means the expenses and losses which are allowed for the business. Okay, and these expenses and losses are not shown in the debit side of profit and loss account. So if it is not shown in debit side of profit and loss account, where it will be given? It will be given in the adjustment. Okay, if the expenses and losses which are allowed to the business and it is not shown in the profit and loss account debit side and it is given in the adjustment, then we have to deduct those expenses or losses. Clear? Now see, rent we have already taken, then 3/4 for car was used for the business, medical expenses, wages is also given in the debit side. Okay, now next fifth adjustment is what? As per income tax rule, rate for depreciation on motor car is 15%. So this depreciation which is given on motor car is not related to the specific depreciation. Okay, it is related to what? Provision for depreciation. So this depreciation we have to deduct here. Okay, that is less expenses or losses allowed but not debited to profit and loss account. Now depreciation is given on what? Motor car. How much? 15%. Okay, so in working note you will write calculation of depreciation on motor car. Motor car, what is the value of motor car? The value of motor car is 2,60,000. On this 2,60,000 we have to find 15% of depreciation. So motor car value is 2,60,000. So 15% of 2,60,000 is how much? 39,000. 15% of 2,60,000 is 39,000. Now this motor car was used for business as well as for personal use. So 3/4 is used for business. So this 3/4 it is used for the business. That's why the expenses is allowed. Okay, so 3/4 is allowed. It is allowed. See here, the expenses allowed. So it is allowed means it is allowed for the business. So 3/4 is allowed. So 3/4 is allowed of 39,000. So how much we will get? 39,000 multiply by 3 divided by 4, we will get 29,250. So 29,250 is allowable expenses for the business. So 29,250, right here, 15% of depreciation on motor car. After that is what? Income not taxable as business income but credited to profit and loss account. Okay, so income not taxable as in business income but credited to P&L account. This means what? Income which is not related to business but still it is shown in the credit side of profit and loss account. So we have to identify those income which are not related to the business, still it is shown in the credit side of profit and loss account. So we will get the such income from credit side of profit and loss account. So buy sell 17,20,000 is related to business income. Then closing stock, it is related to the business. Next is gift from father. How much it is? 54,000. Okay, now gift from father is not related to the business income. It is a personal gift which Ram Rao has received from the father. Okay, so see the this thing format, any type of gift. Okay, so gift from father 54,000. Next is by income tax refund 6,000. Even refund is what? Not income tax refund is not related to the business income. Still it is shown in the credit side of P&L account. So here see, refund of income tax. Refund of income tax is not related to business income. Still it is shown in the credit side. So income from income tax refund 60,000. Sorry, 6,000. Income tax refund 6,000. Okay. Now all the items or particulars of credit side is completed, as well as we have taken all the adjustment into consideration. Now we have to find the taxable income from business. So add all this thing, or add to 29,250 plus 54,000 plus 6,000, we get 89,250. Okay, from this we have to less the amount. So less 6,90,750, 89,250. We have to less this two amount. So we get taxable income from business. The answer is 6,01,500. Okay. So 6,90,750 minus 89,250, we get the answer, that is 6,01,500. So this is taxable income from business. Okay, so in this way you have to compute the taxable income from business. So we have computed the taxable income from business for Mr. Ram Rao. Okay, so this example or this question or this problem was asked in university examination. Okay, I hope you have understood today's session. Thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.